First of all, big congratulations to SG Budget for hitting over $1 million in your equity and crypto portfolio.
Thanks!
Right, so today we are here to interrogate her on how she did it, which is very, very interesting because in Singapore there's this thing, right, where people aim for 100k by 30. But you're just over 30 and you are hitting like 10 times more than the so-called average aim of every retail investor. Can we confirm that you have hit $1 million?
Yeah. Actually, it's not above 30. I'm still 21. Forever 21.
So in this portfolio, it only consists of equities and crypto.
Yes.
Right, so it doesn't include your other assets. In your journey to your $1 million, how did you get here in the first place?
Okay, I must first say, while it sounds very fantastic, I think the truth is I'm not as great as you think I am because there are a few bloggers who started out in the 2010s, right, where I started in 2014. I've seen a few of these bloggers also recently shared that they have crossed the 1 million mark. So I don't think it's like extraordinary. I think it's really just the fact that we are among those who diligently kept investing and we were very deliberate about it. We kept going despite the ups and downs and the failures and the setbacks, and that's what brought us here today. I also have to caveat, must remember that Bitcoin went to 100k.
Yes, correct.
Yeah, so that played a part as well because when we entered Bitcoin, it was below 20k.
Fair, yeah. How long have you been investing?
10, 11 years.
Right, so it took you 10 years to get to 1 mil, which is actually very fast, all things considered. In this $1 million portfolio, how many percent is equities, how many percent is crypto?
On average, crypto is about 20-something%.
Okay.
So the remaining 70-something is equities.
And in this equity portfolio, is it mostly individual stocks or do you buy like ETFs as well?
I have a mix, but my majority are individual stock positions or individual crypto positions. My ETFs portion of the portfolio is very much minimal.
You're a stock picker.
I relish the challenge of being able to find great companies at decent or undervalued prices and investing in them before they go ballistic.
Yeah, you know, and you actually publish this information to your readers as well, right? Your super detailed stock research. And if they subscribe to your Patreon, they even get a monthly update on your stock picks and your stock research.
I used to give this all away for free online, right? And I think in the early days of my blogging journey, I was only invested in Singapore stocks because circle of competence, home ground advantage. After that, I changed my mind after I overheard some people commenting about me at the supermarket. And at the time I was anonymous, no one knew how I looked like yet. Benefits of being anonymous. And like people were just saying stuff about how there were a couple of IPO analysis that I did and shared for free on my blog. And when the company didn't do well, like, I mean, that's got nothing to do with me, right? But because they read the analysis on my blog, they made their own decision to go in. And then when the company didn't do well, like they blamed me. Like, how is that even fair? So it made me question, why should I then give out my analysis for free? Like, it doesn't benefit anyone, so I might as well just keep it to myself. But when I stopped publishing them, I then had readers ask me like, hey, we missed your analysis, where is that? So a lot of them came to me and asked, so in the end I decided, why not I just share my thesis and my reports on a gated community. So that's kind of like, you know, a Substack or a magazine or whatever you want to call it. But I just chose the platform called Patreon at that time to host it. I've since moved over to Nest.io because every month I have excess cash and I would invest my excess cash savings into the markets. So whatever I invest in that month, I would definitely write a full detailed thesis report for myself so I know why I entered. And hence, if I need to leave and exit the position, I also can reread why I entered and decide then, right? So I publish these and people can actually see then, oh, this is what Dawn invested for this month. It's her own money and it's really like, it's just my position. Whether you are interested or not is none of my business. It's just that if you want to get a sneak peek into how I think, how I analyze, and I would call it like model essay learning. I learn a lot from model essays. I read other analysis and I subscribe to this kind of stock pick services as well. And I don't really say it as stock pick. I think it's more of like stock ideation. Yeah, you might discover great ones from like the Motley Fool. I subscribe to them as well. But I would think for all of the hundreds of stocks that they put out, which is a bit too confusing, I usually only get like 1 or 2 great ideas, and usually that's enough. And then from there, I will go on and do my even deeper dive analysis in them.
You know, there are a lot of finfluencers all over the world these days, right? That is like kind of pushing out the same message, which is just buy broad market. You know, stock picking is very difficult. Just buy the S&P 500 or broad market lah, VWRA or something like that. But you don't really do that for yourself. What is your opinion on retail investors who are actually not very interested in like doing research like you, because very in-depth research, right? What's your opinion on buying broad market?
I think broad market works for the majority of people. if you can accept that for the trade-off of not having to think so much, you're okay with getting market returns. Yeah, but I do think that a lot of the advice I see is actually not really just broad market. Everyone's just S&P, S&P, S&P.
Right.
I think there's danger there because there's a bit of recency bias given that the S&P 500 has done quite well in the last few years. But if you go further back into history, the US has not always outperformed. Whether it will continue to do so is anyone's guess.
Right.
But I would say don't put all your eggs in one basket in just one country. So I usually tell my readers, think about the implications. Decide whether you want to listen to what majority of influencers are saying online, which is just S&P 500, or you think that you want to be in broader markets. And if you want to do broad-based because you have no time to research or you don't enjoy the process, right? I think you can layer a fundamental base of all these ETFs and low-cost funds while still having the flexibility to do your itchy hands stuff. I mean, we all have our individual circle of competence. We come across different companies that we love or people tell us about. And it does not take a genius to be able to find undervalued companies or great companies that no one has ever heard of before. If you're in the medical field, for instance, you would have heard of intuitive surgeries way before the public ever did. Imagine if you saw that coming in your hospital and you invested in it. Or let me talk about Apple. I encountered Apple when I was still in university because my lecture hall, when you walk in, everyone has an Apple computer and there's only one Windows. So when the lecturer used to call out students, right, they'd be like,
that person with the HP computer.
Because you say the Apple, nobody knows who, right? When you see these kind of things happening around you, or even Lululemon now, everyone's wearing it, right? It's the next brand in athleisure. When you see these happening and you think that this is, hey, it's the start of something big, you could make an investment into it and just size your position accordingly to the risk and exposure that you're willing to take on.
So, but would you say that, because stock picking requires, I would say, not just effort, but interest as well, right? Because if you ask somebody who has zero interest in analyzing companies, but they still want to grow their wealth, stock picking might not be the thing for them. Because even if I subscribe to your monthly newsletters or their analysis, I still need to make my own decision, which means I need to go and study still, which is time spent, right? So would you still agree that for the average investor that just wants to not let their money be eaten away by inflation, to just buy broad market, like you say, diversify your broad market, but broad market nonetheless?
If you're happy to earn market returns, then why not? But I would say there are a lot of services nowadays that can shortcut your homework. This might be me blowing my own horn, but I honestly think, and I've heard a lot of feedback from my own subscribers, that my reports are so detailed that there's very little they can add on to it. So it's literally like the entire research analysis done for them, and all they need to do is make a decision. Depends on how much criteria and how in-depth you need to go, right? Like some people just read the Motley Fool subscription services, and that's good enough for them to make a decision. But for me, because I'm very in-depth, I don't see that as enough. I see a lot of gaps lacking. So what I would do is I would take the idea and then I would continue research until it ticks the rest of my checkboxes. There are other people who also offer similar stock sharing reports. So if you find someone who you appreciate their in-depthness and their approach of studying companies, then that could potentially shortcut your amount of time and homework.
But I guess the danger of reading someone else's stock report, because if you just be very honest, not everybody is like you in a sense where you are doing serious work, right? But there are unfortunately finfluencers or so-called stock analysis people out there. They are just there to make a quick buck from the subscription, which means that the analysis might be baity and not as accurate, right? So if people don't double check the research, then they risk falling into the trap of just blindly following, and when something crashes, they lose 100% conviction, they sell, just spirals from there, right? How would you advise, say, a person who is looking to invest, build wealth, enter the market? Should they go for broad-based? Should they go for, like individual stocks? And where do you even begin to look for all these resources?
I would say, right, I always tell my readers there are three ways of it, right? One option is that you go for just broad-based, or you can create a portfolio of diversified funds, ETFs, and then that becomes your investment pot. Another way on the other side of the story would be your active stock picks, where you have your individual positions. Well, there's a middle ground. You can have your big base, whatever ratio or exposure you want, and then layer on your individual stock picks on top of that. And if you don't have a lot of time, you're not seeing a lot of these ideas in your own work or own encounters, then maybe that's a very small percentage of your portfolio, like say 10% or less. But if, let's say, I was a doctor and I worked in the medical scene and I saw Intuitive Surgical, I would definitely have gone to research into them and put in a huge chunk of my wealth inside, because if I ask around and people don't know about it, and I see that this company is really doing good work, it's going to shape the way surgeries are being run and healthcare is being provided, why not? And from there, that's where all the biggest wealths and riches are made.
Right, so you are essentially buying broad-based, But you're sort of readjusting the percentage based on your own inclinations, right? So for example, if my company uses a lot of Microsoft products like Teams and like OpenAI because, ecosystem of Microsoft, and I think, wow, Microsoft will do very well. I do a little bit of research and then so I just increase my Microsoft pot a little bit, even though I already hold Microsoft because of broad base. Something like that, right? Final question. In your over $1 million portfolio, how many percent is capital injected and how many is actually appreciation?
I would love to answer that question, but unfortunately, I spend more time studying stocks than tracking every single thing. So I don't have an answer because what happens is that throughout this 1 million journey, I've also been working on saving more whenever I could and earning more, right? It is a combination of save more, earn more, and continuously investing the rest. So as I work on all three pillars, it's very hard for me to estimate how much more came from capital because, every single trade, there's a lot of movements here and there. But all I know is that every month, no matter what happened, I would put that in. If I had a bonus, I had anything extra, I would put it in. If I made a killing in something, I would also reinvest it. So it keeps fluctuating. So it's hard for me to estimate. But I would say as long as you follow these 3 rules of wealth, I think most people would be able to get there. As evident by the other bloggers from my era who also crossed $1 million. We all followed the same 3 rules. So I'm sure other people can do it too.
And if anybody here wants to find out a little bit more about your wealth building journey, you actually wrote an article detailing your 10-year journey, right? And I believe you also have a book coming out, right? So where can these people find you? How do they follow you and get this, get started?
I think the easiest would be to follow me on my social media channels. I am most active on Instagram at sgbudgetbabe. I also have a YouTube channel, still working on building that up, and TikTok. Yeah, I'm most active on Instagram, so you'll find all my latest news and updates there. So if you want to learn more about the work that I do every year, I have actually been tracking my financial review every single year for the last 10 to 11 years. So if you want to see that growth, you can actually chronologically go back because I link everything in order also. You can read the very first one all the way until now and you can see slowly the growth. I'm also very open about it when I lose money. I think in 2022, when the S&P crashed, I wrote that I lost money. I think my investment portfolio was down by 30% back then, but I didn't fret. Right, to me, because it was just an opportunity to just buy more stocks. And I knew that the minus 30% overall in the portfolio at that year was not going to continue. So I just maintained a conviction and I invested more. And a lot of my investments from the 2022, most of them turned out in the green. So I'm really thankful for the experience. You can read all about it on my blog, sgbudgetbabe.com, and follow me on my socials at sgbudgetbabe.
Nice. If you like content on personal finance, entrepreneurship, freelancing, give me a like, follow, and subscribe, and follow SG Budget Babe as well. And we'll see you around. Peace.
Can I make this EV?
No.